basically we're trying to turn our hindsight into your foresight. Welcome to the video. My name's Ugo, your name's Bless. And yeah, in the spirit of trying to turn hindsight into foresight, which is basically, we're all in that mode of like, oh, if I'd gone back back in the 90s, a lot of our parents would say, I wish I'd invested in Apple. Or a lot of us have been like, if I'd known about Tesla, I would have invested in Tesla, all that kind of stuff. And obviously today we're here about talking about investing in stocks. Well, not investing in stocks, but basically investing in general. And we're going to be talking about, advice for beginners and somewhat rookie mistakes. But in the nature of, your time is valuable, my time is valuable, we're going to go straight into it. And it is actually the first one, which is time. When it comes into investing, you have to understand that the biggest power that you actually have is time. So one of the mistakes that people make is that they want to, because they've seen the returns people have made, they want to try and get money quick. And anybody, the quicker they go up, the quicker they go down, is as simple as that. So if your timeline of how long you want to invest is really short, then it's high risk, high reward, and you have to understand you're able to lose the money really quick. So the first advice for beginners is to understand that the time horizon for actual returns in the market is like 3-5 years. You should be investing long term is the best way, especially when you're starting. If you're looking to put your money in today and then see it tomorrow, see a return tomorrow, then you're kind of gambling, which is, in the investing speak, it's called speculating. There's a difference between investing and speculating. If you know what you're investing in, then it's very simple. You are there for the long term, and so it's about time in the market as opposed to time in the market. So understand that the first thing is the time horizon of when you want to see returns. Now, if you're trying to see it by the end of this year, if you're trying to see it within the next 2 weeks, then you are gambling with your money. You are not investing. And anybody who tells you they're going to make you a millionaire in 2 months, the person probably talking to you isn't a millionaire. And if they are, they're probably a millionaire off of selling courses and not by actually investing. Two, the biggest mistake that most beginners make when it comes to investing, the biggest, I understand there's anxieties, the apprehension, all this kind of stuff. Some of you guys have practice accounts, some of you guys have been thinking about it for time and have a low risk appetite. The biggest mistake most of you guys are making is that you're not investing. That is your second biggest mistake, or second piece of advice, that you should be investing. Because look, the truth of the matter is that you're never going to be rich, comfortable, in any kind of state, in any stage in terms of financial freedom or financial whatever, any of those buzzwords that people like to use this day, unless you invest. And you have to invest somehow, even if you start a business, whether you invest in property, invest in stocks, invest in in yourself in terms of doing more courses to level up, whether you invest in if you want to go, you can get it obviously by 9 to 5, but you still have to invest before you can get to that. Let's say you want to change your jobs, go and learn how to code and whatever, then you invest it. You still have to invest. And so if you're not investing, you are not going to see any returns, because the whole point is that you at some point, you're trading your time for money, but at some point you need to start using your money to make more money. Because the truth of the matter is, you are never going to be rich or comfortable or any of those things unless you invest, and you can't save your way to investing. So that's the reason why even when you own a business, it's an economy of scale. You've put in all the work, and then the scale of the business is what allows you to actually, because you've invested so much into it, that it allows you to reap the rewards. So investing. The third thing, mistake and advice that I'd give to you guys is, look, you have to understand that when you come into investing, it's about understanding your risk appetite. It's all about risk. This is all it is. It's all about risk and reward. That's all the game is. That's the basic, simple game of it. If you're doing a short-term thing, it's high risk, high reward. Long-term thing, probably, steady reward. You could even get a big reward, but you don't know. It's about compounding interest. So within that risk comes a lot of anxiety, and that is not understanding how much you're going to have to manage your emotions throughout this process of investing. Because when you see it, that's the reason why long-term investing is best way to go by it. So the advice I'm basically giving you, especially when you're new to it, is probably to set and forget it. Just to set and forget it. If you don't look at it every day, it's not good for your emotional well-being, your mental health, because it just gives you anxiety. Because when you see it going up and down, even though your time horizon is 5 years, you don't really need to be doing that every day. Just set and forget it. So understand that you're going to have to be managing your emotions throughout this process, because it is what it is. Now, the fourth one sounds counterintuitive. Fourth is that, at the same time, listen to your gut. but not every day. You know, if you feel like you should sell, sell. If you feel like you need to buy, buy. Because most times after the fact, what you feel will happen will probably happen. But then if you are somebody that is going up with the wind, down with the wind, every time you get negative news, then you start moving mad and start selling, then my friend, you probably need to just chill, breathe. And this is what happens when you've jumped into it without even thinking about what you're doing when you're investing. When you're jumping on a new stock, you know, you're jumping on Tesla, you're jumping on this, you're jumping on a new name, and then you've gone into that. And so when you do that, then you end up finding yourself flip-flopping, because every time you're selling, every time you're buying, every time you're selling, and you get, oh my days, I should have held, all my days. No. If you're ending for the long term, which is the best way to invest, that's when you actually see your returns. Because it could pop tomorrow, it could pop today, and it can go down today. And so you have to be smart about them. Now, similar to what we're talking about, the next point we're actually going to make is not doing your research when you are investing. So people typically ask me, Ugo, where should I invest? Ugo, where should I invest? And I tell people, the first place you start investing is in things you understand. Now, if you invest in things you don't understand, then you are already making rookie mistake number one, because you're just riding the wave of something you don't understand. So, you know, you chucked your money in GameStop, you saw it go up because you're riding a wave, and you saw it go down. Don't invest in anything you don't understand. Start with the things you understand. It's as simple as that. If you don't understand it, and also if you're not willing to do the research, then most likely you shouldn't really be investing in that, because now you're speculating unless you understand the company to some extent. So do your research. You know, and if you're not willing to do your research on it, then the simple place for majority of investors to just put their money to start off with is this next point. It's just put your money in an index fund. An index fund, I've done previous videos on this, but an index fund is basically a collection of stocks. So imagine you're in S&P 500, you're buying 500 companies for the price of one. Just for one, you don't have to do no research. If one is flopping, it kind of just, they replace it. Similar, there's FTSE 100, 250, S&P 500, all of these different ones. You know, car, SPDR. For whatever your fancy is, there's an index fund for everything. For cars, for electric vehicle, for everything. You know, for bonds, for crypto, there's an index fund. But none of this is financial advice. These are just what I'm telling you, in the sense of that for majority of people, just to put your money in index funds is probably the best place for you to put your money in, and then you see your money grow. And so that's the best place for majority of keep your money, and then just continue doing that. The next point is what I'm saying now is consistently invest. If you're not consistently investing and you're expecting it to continue growing, then it's kind of, it's a commitment. This is a marathon, not a race. You understand? This is the game. We're on a Mo Farah thing. We're not on a Usain Bolt thing. And if you're on a Usain Bolt thing, have fun. Hey! But here is a Mo Farah thing. So consistently investing. Now you invest with what you can. Make it consistent in regular intervals, whether it's every week, every month, every payday. Just consistently invest and just continue, because what you're doing is the two things: dollar cost averaging, so whether it's high or low, you're consistently buying, and you're also increasing the effect of compound interest on your money as it continues to grow. Compound interest is just basically your money making more money and the dividend making more money, especially when it's reinvested. So if you're going to invest in index funds, invest in the ones that reinvest its dividends. So these are just basics that you guys need to understand, and then the ones you learn along the way is when to sell and when to buy. But more times, instead of time in the market, it's just about time in the market. So start investing today, because literally that is, every day is going, you're not getting younger. You're not getting younger. And so, when you get older, it is harder for you to start hitting the times, because you now need to put more money for these things. So do it now while you can. And hopefully I've helped you out a little bit, But the only way you can help me out right now, the only way you guys can help me out right now is just hitting the like, subscribing, sharing this video. Obviously, I put this on my Instagram, a little 15-second about showing my level of patience of going through, investing and seeing as it was going down. And as it was going down, if you see the total at the beginning and the total at the end, I was buying through, and now my portfolio is back to positive. And that's, because I knew what I was investing in, and I was investing in a company that I believe in. You just continue buying. Start with things you understand. Start with things things you're using every day. Majority of the companies that you spend bare money on are probably on the stock market. So find them, and you make a little profit on the money you're giving them. Let a little bit circle. Invest in yourself, your health, and your wealth, and do an act of random kindness. My name has been Ugo. Your name has been blessed. Have a lovely, lovely day. It's coming home.
up, I got money.